Hare Krishna. Welcome to Tax Guru YouTube channel. This is CA Rohanar Pingle, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Marks Network. And today I'm going to conduct a quick special session on recent updates in Tax Audit Report related to assessment year 2025-26. And reason behind this video is our due date is extended for 1 month, that is 31st October. But don't be much relax, keep going on. And so I thought we will brush up again few recent changes which has taken place for assessment year 2025-26 in tax audit report. So that will help us to focus on that particular clauses and we will do it simultaneously. Let's see. Let me allow to share my screen. So key recent updates in Form 3CD applicable for assessment year 2025-26. And what we are going to learn today is amendments, important clause-wise analysis with practical examples, and important clause-wise documents to verify and also audit procedure to help you to do it in fast. So let's start. What are the amendments via Income Tax 8 Amendment Rules 2025 that are effective from 20th March 2025? So clauses are amended are clause 12, clause 19, clause 21st, subclause A, clause 22, clause 26, clause 31, subclause A, Roman 2, clause 31, subclause B, Roman 2, clause 31, subclause C, Roman 2 are amended. And new insertions are note 1 after clause 31 and clause 36b, that is buyback of shares under section 2 subsection 22 clause F of Income Tax Act 1961. What are the omissions in tax audit report? Clause 28 and 29 relating to details of amounts borrowed on hundi and repayment of hundi in cash are now omitted. So let's see. Summarize amendments under clause 22. Transactions with MSMEs revised. Split into 3 subclauses. 1, 2, 3 from assessment year 2025-26 onwards. Reporting now requires disclosure of interest inadmissible under MSME Act, total amount payable to MSMEs during the year, and breakup of amounts paid within and beyond due date. It is beyond due date disallowable under section 43B subclause H. Under clause 18, that is depreciation adjustments, reporting of opening WDV adjustment for entities opting for new tax regime under section 115 BAC clause 1A applicable from assessment year 2024-25 onwards. Clause 30A, transfer pricing adjustments. Expanded reporting for primary adjustment under section 92CE, that is including APA, MAP, and voluntary adjustments. Auditor must verify repatriation of excess money within 90 days, else report interest or additional tax liability. What auditor must to verify is the repatriation of excess money within 90 days, else report interest or additional tax liability. Clause 94B, interest limitation, that is theme capitalization rules, exemptions extended. Non-banking financial companies from AY 24-25 and IFSC's finance companies from AY 25-26 excluded from this applicability. Okay. So now we will see clause-wise analysis with practical examples. Let's start. Clause 12, valuation of closing stock. Amended by 2025 rules requires what? Clear method disclosure. Requires what? Clear method disclosure. So example, if a trader shifts from FIFO to weighted average, auditor must disclose what method change and quantify the effect. If a trader shifts from FIFO to weighted average, auditor must what disclose the method change and what is the method change and quantify the effect. So verify the stock valuation method, quantify change impact, ensure disclosure in report. Next, clause 18, depreciation. What is the update? New subclause for WDV adjustment under section 115 BAC clause 1A. Let's see example. Assessee opts for new regime. WDV adjusted to exclude the disallowed deductions. Auditor must report revised opening WDV in Form 3CD. For that, check correctness of adjusted WDV, reconcile with tax records, and ensure computation matches law. Next clause, clause 21, subclause A. Disallowance under section 40A, 40 subclause A, 40A subclause 3, etc. So amended in 2025 rules. Example, if salary paid in cash above rupees 10,000 per day, it must be reported as what? Disallowance. Examine the cash payments, TDS compliance, and highlight inadmissible expenses in 3CD. For salary, if it is cash above rupees 10,000 per day, then it must be reported as disallowance. Okay. Earlier it was 20,000 per day. Clause 22, MSME payments. Update. Major revision effective from assessment year 2025-26. Means you also go through what are the in detail for those clauses. This is a brush up video. Okay. So if you want, you can go through and study these clauses, what are actual in detail updates so that you cannot miss anything to report. Okay. So major revision effective assessment year 2025-26 in case of MSME payments. Example, goods purchased from a small enterprise, credit period equal to 45 days. If paid after 60 days, amount disallowed under section 43B clause H and reported under clause 22 sub Roman 3 clause sub clause B. Okay, means example, small enterprise credit period is 45 days, but paid after 60 days, then amount disallowed under section 43 BH and reported under clause 22 Roman 3 clause B. So for that, obtain MSME declarations, verify aging of creditors. Important, very important. What you need to verify is aging of creditors and classify the payments as per 22 uh, sub 22 Roman 1 to Roman 3. Clause 26, Section 43B payments. Update is amended in 2025 rules. Example, employer contributions to Provident Fund but deposits in June 2025 after due date under PF Act. Disallowed, report under clause 26. So even employer contributions to PF but deposits in June 2025, okay, after due date under the PF Act, then it must be disallowed and report under clause 26. Verify due dates versus actual payments ensures disallowance correctly computed and reported. Clause 38. Transfer pricing adjustments. What is the update? Auditor to report primary adjustment acceptance, repatriation status, an interest or additional tax. Let's see example. Company accepts transfer pricing adjustments of rupees 5 crore in financial year 23-24 if funds not repatriated by 28th February 2025. Auditor must report liability to pay additional tax at the rate of 18% plus surcharge or applicable excess in financial year 24-25 report. So this is very important and we can be helpful with an example. Company accepts TP adjustment for 5 crore in 23-24, but if funds are not repatriated by 20th February 2025, auditor must report that liability to pay additional tax at the rate of 18% plus surcharge in FY 24-25 report. So verify TP orders, agreements, repatriation status, and interest liability under 92 CE. Clause 31, loans and deposits. What is the update? Note 1 inserted after clause 31 relevant to assessment year 2025-26. Example, loan of rupees 25,000 received in cash from a friend, violation of section 269 SS, reportable under clause 31. So review the loan agreements, cross-check the cash receipts or payments, and report the violations. Clause 36B, buyback of shares, new clause, very important. So see and read, go through the updates on your own. Introduced for FY 24-25 requires what? Reporting of income received under section 2 subsection 22 clause F. Let's see example. Company buyback shares at premium, excess treated as deemed dividend, report under clause 36B. So what is the important for auditor point of view is excess treated as deemed dividend, company buyback shares at premium. So that excess will be treated as deemed dividend and need to be reported under clause 36B. So verify the buyback resolutions, agreements, tax treatment, and report deemed dividend. Clause 44, GST compliance. No change, but still crucial. Auditor need to reconcile the turnover, ITC, and demands or refunds with GST returns. If turnover as per books 100 crore, but GSTR9 shows 102 crore, so different must be reported with reasons. Reconcile the turnover, ITC, demands or refunds with GST returns, and disclose mismatches clearly. So what is a practical tip for auditor is given the changes in MSME reporting clause 22 and TP adjustment clause 38, auditors must obtain written management representations and supporting evidence before the finalizing the reporting. Okay, that is the practical key for the auditor. Now we will see again clause wise what documents we need to verify and what audit procedures or practical steps we can carry it out. So let's see. Valuation of closing stock, documents to verify stock register, inventory valuation sheets, method disclosure in notes. Audit procedure will be verify consistency of valuation method with accounting standards or whatever applicable ICDS. If method changed, quantify the effect and disclose it in your report. Match closing stock with financials and GST records too. For clause 18, depreciation, documents to verify fixed assets register, IT depreciation schedule, WDV computation under section 115 BAC 1A, and audit procedure would be recompute the depreciation as per IT Act. Ensure WDV adjusted for disallowed deductions if opted for new regime. Reconcile fixed assets register with tax computation. For clause 21, subclause A disallowances under 4 clause 40, 40A, and etc. Ledger extracts, salary, commission, interest, rent, TDS, challans. We need to verify the ledger extracts of salary, commission, interest, and rate. and also TDS challans and audit procedures would be verify the cash payments more than the limit specified, that is 10,000 and 35,000. Check TDS compliance. 35,000 is for the transport operators. Check TDS compliance, report non-deduction or delay. Cross-check related party payments under section 40A, subsection 2, clause B. And next, clause 22, MSME payments. What needs documents need to be verified is MSME vendor list. We need to verify the declarations, creditor aging schedule, payment records, and audit procedures will be obtained. Vendor confirmations on MSME status, identify dues outstanding beyond the statutory credit period, segregate payments within due date versus beyond the due date, and report under clause 22 to Roman 1 to Roman 3. Clause 26, section 43B payments documents need to be verified are PF and ESI challans, GST payment challans, leave encashment procedure provisions, and audit procedure will be verify actual dates of payment, compare with statutory due dates, and report unpaid or late payment as disallowed. Clause 38, transfer pricing adjustment. Documents need to verify TP orders, APA, MAP agreements, bank remittance proofs, and Form 3CEP. An audit procedure would be review TP adjustments accepted, verify repatriation of excess money within 90 days. If not repatriated, compute and report additional tax liability under section 92CE. Next, clause 31, loans and deposits. Documents need to be verified on loan agreements, bank statements, cash book. An audit procedure would be check if loans or deposits more than 20,000, received paid in cash, report under section 269 SS or 269T, verify PAN of lenders, borrowers, and reconcile loans with financials. Important clause, new clause 36B, buyback of shares. So documents need to verify our board resolution, ROC filing, buyback agreements, and bank entries. An audit procedure would be verify premium paid on what buyback, compute deemed dividend under section 2, subsection 22, clause F, and ensure proper disclosure and tax treatment. And clause 44 for GST compliance, documents to verify are GSTR1, GSTR3B, and GSTR9 or 9C, whichever is applicable, that is a reconciliation statement. And audit procedure will be match turnover in books with GSTR9, verify ITC claimed versus GST returns, reconcile the demands or refunds with financials, and report mismatches with reasons. So these are what we are going, means we have learned the recent updates relevant to assessment year 2025-26. Hope it will be benefited to you. So gear up for, as the due date is already extended, but don't relax much. Okay. So be in touch with the Tax Guru YouTube channel. If you are not yet subscribed, then do subscribe it for latest updates like this. I have already started 3 video series on Tax Guru YouTube channel. What law says, under that we always see case laws reported to High Court and ITAT under income tax, and cases reported to High Court under GST law, and also the another video series on GST relearn. So go through it, learn it. Learning is very important for practitioners. So keep updated. Bye bye. Take care. Hare Krishna.